Today we're highlighting Tiong Logistics, which just reported its first quarter results. MIDF Research downgrading the counter to neutral from buy and cutting its target price from 1 ringgit 5 cent to 85 cent. The stock last closed at 85 cent. So Tiong booked a net profit of 1.55 million ringgit for the first quarter of FY22 versus a net loss of 5.53 million ringgit a year earlier. However, according to MIDF, the company's corporate army of 1.42 million ringgit came in well below both the research houses and consensus expectations at just 6% of full-year estimates. Meanwhile, revenue jumped 35.7% to 166.91 million ringgit, thanks to a 35.9% increase in top line at its logistics and warehousing segment. This improvement was due to the acquisition of new total logistics customers, coupled with business expansion from its existing customers. Its property development segment's revenue also quadrupled to 1.2 million ringgit, though its hotel and dormitory segment's revenue fell 15% to 1.7 million ringgit. Despite the lower than expected first quarter earnings, MIDF says it's positive on the potential growth of the logistics and warehousing segment. Plus, earnings will no longer be dragged down by the loss-making hospitality segment following the dilution of the group's stake in Terminal Perintis. In view of the lower than expected first quarter earnings, MIDF lowered its earnings estimate for FY22 to 17.4 million ringgit. So what's the consensus? At time of reporting, MIDF is the only one to have covered Tiong post its first quarter results. So to recap, that's a hold with a target price of 85 cent, which is what Tiong closed at yesterday.